All right, then let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. The risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account, based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. All right, let's jump into the market and see if anything has changed. Looking at the spiders, we did pull back after the Fed meeting minutes. Basically, reiteration of the same information where interest rate hikes are off the table, but when the interest rates will be cut, that's still kind of unknown, right? It does require time. Cannot hear you. No sound. Alon, can you hear me? Shows that the sound is fine via phone line. Via phone line. All right, so Alon said he can't hear. Okay. So Cecile, it's probably something on your side. Not sure, I apologize. But try to connect through a phone line, right? There's a phone, you can do it through a computer or you can do it through a phone. And maybe through the phone, it will be a better connection. Back. We're kind of in the middle of the session, but it's trading between 50-day moving average and 200-day moving average. That's still bullish for the market, right? So the 10-year is still bullish for the market in terms of that work on YouTube. Thank you, Alon. Perfect. Yeah, if you welcome on YouTube, please subscribe to our channel and hit like button if you like the content. But you can see dollar is rebounding from the 200-day moving average. It's trading right up, facing this broken uptrend. I mean, we do have NVIDIA earnings, right? That's the main event for today. Everybody's talking about NVIDIA earnings. So very important. Japanese yen continues to be weak, right? That's still a risk to the market. Intervention. We had one intervention, it kind of didn't work. So I assume there'll be another intervention by Bank of Japan to stabilize the currency. High yield. High yield pulling back to the 50-day moving average. VIX did jump back to 12 level. Value stocks are down 0.5%, QQQ down 30 basis points, semiconductors are flat, and spiders is down 50 basis points. Right, small caps are also. So it makes sense, market is overbought, pullbacks, it would be expected to have a pullback. So I still think it's a short-lived pullback, and all eyes are on NVIDIA earnings. Lalit, welcome. Can you hear me? Lalit, I just want to make sure. Hello, Lalit. Can you see can you hear me? Yes, okay, you can hear me. Okay, so Cecile, maybe it's something was hopefully, just on your side. All right, any questions on yield? Let's look, so we had the Fed meeting minutes today, right? Probably no new information. Market did pull back slightly because there's still kind of reiteration that it's unknown when they're gonna cut interest rates. Several Fed speakers actually said that we will need at least 2 to 3 data points to see the inflation coming down. We had inflation number from England today, from Britain. It came in months over months, year over year, a little bit harder than expected, right? So then you have kind of rising yield and market pullback. So it's the same kind of dynamics that we have seen in the past. We do have NVIDIA earnings after the close, and we do have services and manufacturing PMI, right? If it's within expectation, I think that's positive for the market. If it dips below 50%, it could be interpreted as economy slowing down at faster rate than anticipated. So that could be bad for the market. And obviously, if it reaccelerates to the upside and much higher than 50, services and manufacturing, that also could kind of put in question cutting rates sooner. So I think you want the manufacturing and services data kind of come in within expectation. Anything significant move to the downside or upside could create more volatility in the market. All right, Brad, welcome. Thomas, welcome. Thank you for joining. So in terms of NVIDIA going into the earnings, let's look at NVIDIA. Instrument, remove Macy's, GameStop. So NVIDIA is down today, going into the earnings 1.5%. You have pullback in financial. Goldman Sachs kind of pulling back after a strong rally. Regional financials are actually breaking down below 50-day moving average. I have to make a decision about regional banks, regional financials. Down 2.5%. Japanese market is below, pull back sharply, and gold miners pull back sharply. Right, again, expectation higher for longer, higher inflation data. Positions and see if anything has changed. So Amazon, it's a June contract. Still have a spread. It's, I mean, today it's outperforming the market, but it's sitting right at the 50-day moving average. So for now, I'm bullish on Amazon. It's a June expiration, so I still have time. FXI, I'm long FXI. It's kind of been a one-way trade. It did pull. It is pulling back today. Kind of reversing the gains from last week. We'll see. But I still think it's a very strong momentum to the upside, and buyers will step in on pullbacks. Right? Buyers will step in on pullbacks. So I'm still bullish on FXI. We talked about Goldman Sachs. I did trim half of the Goldman Sachs position. I still have the other half position open. For now, the bullish trend is intact. I would watch 456 maybe level. Maybe is the support, but definitely 425. Well, that's pretty big breakout. So for now, I would just wait for 454. But as long as we're above 454, this is just a healthy consolidation. KRE. KRE down 1.5%. At the 50 level. So that's the breakout, right? We've consolidated through this 49.80 for few months. I think we're okay. If we do start breaking down below the below this trend line, then I would start being concerned. But for now, it's still, I think, is just a short-term pullback. Anton, Cecile, Brad, any question? Thomas? Okay. So still long regional banks. Macy's, let's see, did Macy's get filled? Macy's did not get filled, so I'm still waiting for Macy's to the iron condor to get filled. It's trading at 20 level. We have 2 days, Thursday and Friday. I mean, 10% move would be probably exaggerated. So for now, waiting for the call spread to get filled. I did trim regional financial. Regional financial, along with theory, is pulling back. So this does not look like a good price pattern to me. It's down 2.5%. Maybe it's time to exit regional financial. Let's look at carry in general. It's even right at the support. Okay, I guess I can wait maybe one more day and just see if there's a follow through. I mean, I did close half of the position, so I'm not down. I'm down less than $250. So maybe I close it on the bounce back. Regional financials. I mean, a lot of it will depend on NVIDIA earnings as well, right? Not a lot of price action in interest rates, actually interesting. Let me just close. And the drop below 50-day moving average is probably going to continue going low, leave it at that. This market is overbought, it could pull back more. So makes sense to close the rest. Okay. So I am out of Wells Fargo. So and I'm waiting for Wells Fargo, $4.20, and I'm out of Texas Instrument this morning, rather than trim Goldman Sachs. Okay. Any questions on regional financial? So then we have silver. So it looks like all interest rate sensitive sectors, whether it's commodities or small cap stocks, regional banks, they are pulling back. Silver, the breakout is at 27, so it looks like it wants to close the gap at 27. I did trim the position, so maybe at 27 consider buying again after trimming the position. So still bullish on silver. Wells Fargo and XLE. So Wells Fargo trading above 50-day moving average, right? It's trading above 50-day moving average, so it's still. America is doing also well, but banks are still in strong uptrend. So I'm still bullish Wells Fargo. Energy, we did have a drop in energy prices, so XLE is basically retesting the lows. So I would have to watch this level. If we do have a follow through again and we drop, crude oil drops through the support level, then probably time to exit energy, at least for short-term trading. Any questions on crude oil or any of the positions? All right, let's look at the earnings. So NVIDIA earnings is definitely, major event probably going into summer that will set the tone for the market. We do have Medtronic, so we can look at both. Let's look at Medtronic and let's look at NVIDIA. All right, so in terms of NVIDIA, from this morning, we talked about, not much has changed, right? This data doesn't get refreshed till the next day. But in terms of positioning, you do have 880 support. You have on the upside 1,000, implying 5% move, 1050, implying 10% move, and 1100, implying 15% move. And then in terms of supply and demand, right? So let's go with that example. So 940 is 150 points, right? So I assume it's very similar. Yeah, it's still 40 times 4 almost. So around $150, right? So same thing, right? So that hasn't changed. So if you do want to, let's say you think, can get to 1,000, well, buying 1,000 call is $17, right? So you have to spend basically, what, 2%, right? 2% of the strike. So the only way to mitigate or reduce that, if you buy 1,000 contracts, sell 2 1050, and buy 1 1100. Right. This way, if you buy 1, selling 2, and buying 1, you're paying $5, right? So the most you can lose is $500. On $10,000 account, 5%, that's too much risk because you don't know if it's going to go up, it could go down, right? So you probably, if you want to do calls and puts, you have to spend $1,000, right? So unless you have, for $40,000 or $50,000, that's just a very risky trade because volatility will collapse, right? All of this volatility will collapse, assuming you don't have a large, 2 standard deviation move. And a lot of people do expect kind of a short-term, maybe up or down price action. ADI today was 2 standard deviation, right? ADI usually does not move more than 7%. But today it did move 80%, 8%. So if you did iron condor, that worked well. You can also narrow this, right? Maybe 125, 1075, and spend only $1.40. But this way the range is pretty narrow, right? It has to move to 1025, 1050, 1075, right? Risking $1.45. So then it would have to close, right? It has to close somewhere in this region. Any questions on NVIDIA earnings and the strategy? So here you can risk $1.43 plus another $1.43. So you could limit your risk to $250 on a $1,000 stock. That's less than it's what's it, 10 basis points, right? 10% would be 105, 1% would be $10. So it's 20 basis points. So this allows you to participate in the trade, but it has to, the profit and loss, right, will only happen if, it stays, above 1025 and below 1075, right? So somewhere in this region, that's where you profit. If it doesn't get to this level, or if it shoots over this level, then, you're risking money. Any questions on John? No problem. Welcome back. John, yeah. So earnings, if you have a bigger account, I would try NVIDIA, right? That could be, something like this, because it probably, if any positive earnings, and you could gravitate toward 1025. So the 1025. So that would be NVIDIA earnings. Any questions on NVIDIA earnings? If you have a smaller account, Medtronic. So let's look at Medtronic. So usually it doesn't move that much, right, Medtronic? Let's look at the position. So currently trading at $85. And in terms of so for the most part, it's above 0.5. So it's a put skew, right? So to me, this looks like positions are well hedged. So you probably want to sell premium, right? You want to sell premium on the spread. So you would do iron counter, sell call spread, sell put spread. On Tradespoon and Elite, you would see all of this trade. So it's sent. So this is put skew. So I'm going to short the volatility. Let's see where the highest open interest is. Well, short dated option, there is not much open interest. 6% of 85 is what? 6 times 9, 54, $5.40, so 91. 90.91. So highest open position is at 90. Historically, it's 6%. 6 times 9 is $5.40, so it would be 91. On the downside, highest open interest is at, in terms of hedges, is 77.50. It's probably too far. $80. No, it's 70. Let's see how much premium. Let's look at the premium. 77.50. So let's do 77.50. In terms of historical moves, again, 6 times 9, $5.40. Probably here is more, so 80. I'll put 80. All right, and so that's positioning in terms of high open interest and historical move, and then we can kind of do the same. The estimated move analysis at the money straddle, that would be $4 plus another, the strangle, out of the money strangle. So this is 4, 5, and 2, 7, a little bit less, so 6.5. So 6.5. So 6.5, that will be to 91. Let's see it again. 370, 470, 570. So $6.5, right? $6.5. So 6.5, that will take you to 91. And 6.5 would take you to basically 77.5. So now let's look. So let's try that trade. So you would, let's see, 91 call. 91 call is trading at 30 cents. 92 is 20 cents. So let's say if I sell the 22, strikes, and the put strikes would be, well, ideally 77.5. Well, that's worthless. So 79. You can do 80. And it's probably 79 is easier. Pretty wide bid and ask. So So let's see, sell 80 and buy 77. So this is an iron condor, right? Where if you do it one by one, let's see, you can collect 37 cents, right? 37 cents. Just about 30 basis points. So let's see if I can execute this trade option. Medtronic. Vertical. So let's do call spread, $2 call spread difference, 92.94. $92.94 and see if I can get 11 cents. Okay. So I was able to get 10 cents for 92.94 call, right? So 15 basis points. You can find the same information under orders. And on the risk taking, $2, 10 cents, right? What, 10% is, it's 5%, right? So it's a 5% return on the risk taking. And then, since I don't really, and then if you want to improve the return, right? If you want to get more return without taking more risk, well, then you sell 80.77 put. So we can do a trade option. Electronic. Let's see how it might try to behave lately. Yeah, lately it hasn't been. And here it was volatile, right? So it's kind of a sharp pullback recovery. So it could get volatile after, so as much as 4%. So vertical. Let's do $3 strike difference. And now we're looking at 80.77 put, right? So you have kind of two brackets, right? You have this spread where you sell in premium and this you sell in premium. So you're collecting premium on both sides with the assumption that, that these levels will not be broken. One is 77.5 and one is 90. 90, I mean, there's some demand for 92 calls. Let's see, so we said 77. $79, right? 79. What did I do? 79. 79. Oh, 80.77 put. 80.77. So that this level will hold between 80 and 77.5. Okay. So can I get 15 cents for that? $0.12. Okay, 12 cents. Okay. So on Yellow Panel Earnings Power Trader, you could see this iron condor in Earnings Power Trader. On the Tradespoon, it would, I mean, all orders are under Elite. Any questions? So John, that would be my thought process on the earnings. Right. I mean, there's other earnings like Ralph Lauren, BJ, but they are very volatile. They're not very liquid. Right. So I wouldn't take a chance. Any questions on the earnings? Yeah, so everybody talks about Fed meeting minutes, that could be the culprit. Not sure. Let's see. 10-year yield, what is it? 1 o'clock. It's a pretty small move. You can see QQQ is already recovering, right? So QQQ is recovering, spiders also trying to recover. So, but most of the selling pressure is interest-sensitive sectors like small caps, regional banks, and metals and miners. And it's the same trade, right? Higher for longer. You know. So people do talk about earnings. NVIDIA earnings. Fed meeting step sees inflation coming down more slowly. Many officials see low-income households under financial pressure. Some officials worry financial conditions are not sufficiently restrictive. Some officials think long-term rates may be higher for longer. Okay, I'm not sure if any of this is new. But market is overbought, so it makes sense that people are kind of a little bit less optimistic. Yeah, I don't see anything else that can move the market or kind of, I mean, Fed meeting minutes spiked short-term volatility, but you know, this is still less than 1%. And NVIDIA earnings. So NVIDIA, let's see, how's it doing into the earnings? All right, 2:54. We have more people joining. So, Anton, which spiders support? Sure. So, in terms of today is 20. So we have 23rd and 24th. Right? So we have Thursday and Friday. So you do have a pretty large position at 525. Right? So the first support is on spider is 525. Going into the earnings, and the next is 520. So those are your support levels to watch tomorrow after the NVIDIA earnings. Right? As long as we are above 525, 526, I think bulls are in firm control. You do have, I mean, it's not huge, 16,000, but it's relatively large. You do see a lot less positioning, right? Remember, April, May expiration, all of these numbers were 80,000, 100,000. So in terms of hedging, I would say half of the volume, but you need some kind of a catalyst to break through it. So for now, I think 520 is well set. We could quickly drop from 520 to 510 because there's not much. If you look at the stock forecast toolbox model, actually up until today is pretty bullish, so it doesn't see momentum below. If we're closing at 529, not, you know, really nothing has changed to the current uptrend. It's still intact. John, put, so I did put spread. I did 80.77 put spread. I was able to collect 12 cents. So 20 cents on $85 stocks, that's, you know, on $2,000 risk, that's 10%, right? So you can return, you know, you're looking for 10% overnight. If you use an underlying stock, you know, that's about 30 basis points, right? 25 basis points. So credit, I was able to get 12 cents on put spread. Thank you, John. All right, guys, that's all I have today, and after close. So we'll watch, see how, you know, if they hit a home run, bull trend will continue. If they miss on any of the parameters, I think pullback will probably be shallow, if I have to guess, like one standard deviation, right, at 880. So I think it will stay between 1050 and 880 probably. And that will set the tone, right? If it drops to 880, it will pull back the market short term. All right, that's all I have for today. You guys are awesome. Thank you very much for joining. Really appreciate it. And I will see you tomorrow morning. Thank you on YouTube. If you guys like the content, please hit subscribe. Trying to grow our viewership. If any of these videos or today's video you liked, please share, hit the like button. That would be greatly appreciated. Alon, Anton, Brad, Cecile, John, Kula, Lee, Thomas, thank you very much and have a great day.